Hi, welcome back to the channel. My name's Phil and this is Grow Your Dough. This is the 5th video in my playlist, The Quality Momentum Blueprint. In the first video, I gave you an outline of what to expect from this playlist. The second video was a revisiting of factor-based investing principles. If you're new to investing in the stock market or haven't used this approach before, it really underpins what I'm trying to do, so please go back and watch that video. In part 3, I outlined my rationale for my investing strategy and I demonstrated how I achieved that using my screener on Stockopedia. In part 4, I then walked you through how I analyze each stock report, trying to select the best candidates to go forward. In today's video, I want to give you a brief introduction to a chart overlay called Ichimoku, which is a Japanese overlay. And it's fundamental to how I choose whether to enter a stock and how I maintain my stop losses and when I decide to exit. So it's a brief overview, and then that sets us up for us to be able to look at the price charts in the next video. So let's get into it. So here we are on the TradingView platform. I've chosen this platform because it's got some really powerful features that allow me to present Ichimoku charts to you in a gentle way, not overwhelming you by just putting all of the data on the screen in one go. It would be too much. It's also got massive selection of overlays and indicators. It's got stock screeners. It's also got automation software, so you could automate a strategy. Connected to your broker. It's a really powerful tool. Another really cool feature of this is it's got a replay scenario, so you can go to any bar in the history of the chart and then just step forward a bar at a time, and that can be really useful in me explaining stuff to you as we go through my approach. So that's why I'm here on TradingView. If I want to change tickers, I can just type straight in the keyboard Apple, for example. Apple, it pulls up the chart. So we're actually looking at Friedrich Vorwerk Group, which is one of the stocks that came out of the screening process in the last video. It's on the German exchange. So for this demonstration of Ichimoku, I want to just take you back to this bar here. Now Ichimoku has got several indicators built into it, sort of like moving averages that sort of give you a short term, a medium term, and a long-term perspective of what the share price is doing in relation to the indicators. So the first indicator, the first average, has a period of 9 bars. That's the range of bars that it's considering when it's trying to work out its average. So for that period, it looks at the highest high and the lowest low, and that's the range there. And then it averages them. So now we have an average of those bars, highest high, lowest low over 9 days. So let's just take some of this stuff back off. So if I go to the Ichimoku chart now, I can start to add in some of the components. So here's the first one. There's the average for the fast period of 9 days over time. And you can see that the price frequently crosses this. This is only 9-day moving average, so it's going to be cutting back and forth through it. And when the stock is horizontal, it's cutting through it a lot. Okay, so a cross of this moving average is not catastrophic or majorly significant. It happens a lot, but it might let us know something's happening. So that's a really fast moving average. Let's look at the next one. So the next moving average considers the share price over a 26-bar period. Again, it looks at the highest high, and it also looks at the low for the period. And again, it chooses an average. And if we go back to the Ichimoku chart settings, I can turn on that line now. So now we have a fast and a medium or a slow average in comparison to each other. And again, you can see that the price does cut through it, not as often as the fast moving average. And there will be times when the two averages intersect and cross, and that can be significant too. When it's consolidating horizontally, that sort of stuff is happening a lot all of the time until the price breaks out into a trend the lines sort of separate during that trending process, and then the crosses become more significant as you start to try and work out, is the price consolidating or is it about to turn bearish? So we've got a really short-term indicator, the orange line. We've got sort of a medium-term indicator, the red line. We need something that's a bit longer term now. So we start to build that up over a series of a few other indicators. So if I bring back in the average for the fast period and the average for the slow period, and I average that, this is my next indicator. And this indicator is projected forwards in time by 26 periods, 26 bars forward. So let's take some of this stuff off so you can see. And this sort of forms a medium to long-term support line. You can see that it's coming up and then it breaks down through it. Here it's trundling up slowly. So it's more of a medium to longer term support line. Okay, so that's one part. So then the next part then is we consider a really long-term period, 52 bars. Well, if you think that was a weekly chart, this would be a year's worth of data effectively. And again, we're back for the highest high of the period, and then we're trying to find the low of that period too. And again, we average. So the average line is here. I can turn off the low and the high. And again, if I go back to the Ichimoku controls, I get a second line now. And to make it a bit easier, what Ichimoku does is it turns that into a cloud. When the stock is bullish, the cloud is sort of pointing upwards and is green. It's the relationship between these two lines, the very long-term line that's considering 52 weeks, which moves really slowly upwards, and a medium-term line, the top of the cloud, which is moving on a more medium to long-term approach. So the top of the cloud moves faster than the bottom of the cloud. We've got some more interactions now because now the price can bounce off as it's done here, or can break through the cloud, which is called the Kumo. And Ichimoku, the term means at a glance. So what it's trying to help us do is look at a chart and at a glance understand whether the chart is bullish, bearish, or consolidating. So how can we do that? So there's some rules. First of all, the future cloud is bullish. It's green, right? So that means straight away we know that the chart is trending sort of upwards. The price is above the cloud as well. And the price is above, so it's above the long-term support of the cloud, it's above the medium-term support of the moving average, and it's above the fast-term moving average as well. And the fast-term moving average is above the medium-term moving average. So everything about this is saying that this stock is bullish. And you can see that at a glance. So now we have the cloud, we can start to look at the various signals that are offered by Ichimoku. Whilst the price cut through the medium-term moving average here, which is considered a bearish signal, it happened above the cloud. So whilst it's bearish, it's considered a weak bearish signal. Principle would be that there would be some support from the cloud and the price would rally up again. The moving average is crossed above the Kumo. Whilst it's bearish, the fast moving average cutting below the slow moving average, it happened above the cloud, so it's weak bearish. If it happened below the cloud, it would be a strong bearish signal. The chart is already medium to long-term bearish, and now we've got a faster moving average cross that is bearish, so it would be considered a strong bearish signal. Signals that occur in the middle of the cloud, like here, the fast moving average cuts the medium term moving average in the cloud. It's considered more neutral. It's undecided. Because you can see here, when a stock is consolidating, this sort of activity can happen a lot. But if that cross happened outside and above the Kumo cloud, that would be considered strong bullish. The medium to long term support is bullish. And now there's a powerful upsurge to get the fast moving average to cross and pass above the medium term moving average. So that would be considered strong bullish. A break below the cloud like this would normally be seen as bearish, or here, bullish. What else can we notice? When a stock is trending strongly, then the Kumo cloud is thin, pointing diagonally upwards. But as the price starts to consolidate, the bottom of the Kumo cloud flattens and the cloud fattens. And this indicates that there's been some disagreement between the bulls and the bears as to who's in charge of this stock. And the theory is, the thicker the cloud, the harder it is for the price to penetrate through it, because there's been so much disagreement here that there's usually a bit of a tussle. But if the price is thin like this, if the cloud is thin like this, there's not been much resistance to the price rise. And so it could be that the price will fall through a thin cloud much easier than it would this thick consolidation cloud here. You could argue that that's sort of what happened here. It's gone up incredibly sharply. It means the Kumo cloud is very thin, and actually it struggled to support that when some weakness came in, and eventually it came back through the cloud. That's the theory anyway. That's the idea behind this approach. So with this chart as it stands at the moment, notice lots of things are pointing up. The very fast moving average is pointing up, which can happen quite frequently. The medium term moving average is pointing up as well. That can happen a lot too, although it can go shallow. The top of the cloud is pointing up, which is more likely to happen because it's medium term. And the bottom of the cloud is pointing up, which is less likely to happen. Because the 52-day or the 52-bar consolidation period is so long, then the average can get tied to the bottom of the low for a long period of time. If the bottom of the cloud is trending up, it either means the chart is setting new highs, or the low is right on the edge of its period, so that every day you step forward, the low is getting higher and higher and higher, which means the average is moving up and up and up. There's one last indicator on this chart that is useful, and I'm going to jump here to show you it. The last element is called the Chikou, or the lagging line, and it is the price, closing price here, pushed back 26 days. So here, 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 here. So how is that useful? How do I decide if a stock is trending or consolidating? If we roll this forward, the price starts to flatten, crosses back and forth across the fast moving average, comes close to touching the medium term moving average. And look what happens to the lagging line. It starts to collide with the price action. I know that this stock is now consolidating. That's my objective way of determining whether a stock is consolidating. What I'm trying to do with all of my stuff is take my mind out of this in terms of subjectivity and give me a more objective way of deciding what's going on. So for me, when that price action collides with the lagging line, then I know this stock is consolidating, and that might change my behavior in terms of what I want to do with this stock. I might move a stop loss. I might be more ready to sell it or use it as a source of funds. So we'll come on to that later, but I'm just trying to help you understand how and why I use it like that. So let's go back here again. So at this point, there is tons of space between the lagging line and the price action. If everything was set up for me, I'd probably buy here because I know I've got lots of space here, 26 days or maybe 22 days maybe, before the price runs the risk of consolidating. But if we run this forward, and I was considering buying here, maybe it came up on my screen, then I'm more concerned because the buffer that I had is now being shrunk right down. This stock has got to start doing something quite quickly to clear this price action. So when I see the Chikou, when I'm looking to do a buy, I want there to be a reasonable amount of space between the lagging line and the price action. I don't want to waste my time in stocks that are consolidating. I'm looking to compound my investment. And it doesn't compound if it's stuck in consolidation. I'll choose another candidate, or what I'll do is I'll wait. I'll wait for the price to go back and forth and back and forth and back and forth and back and forth, and then break. Because what will happen then is that this is going back and forth and back and forth, back and forth, back and forth, and it breaks. And then it has got plenty of space. I want my stocks to be trending, and I want to give them the best chance. I'm prepared to pay a little bit more by having it break out than sit there consolidating where I've got to pay FX fees if it goes wrong, in and out. So the lagging line helps me decide if I'm going to enter. And it also tells me when I'm holding if we're entering a period of consolidation, and I may decide to use that as a piece of information as to how I should exit, but we'll come on to that later. Today I use TradingView as a means to show you the Ichimoku clouds. There's really powerful features. We only scratched the surface really of what it can do and what it can offer. Powerful charts with lots of indicators, news, analysis. There's an editor where you can develop your own techniques and strategies that can be connected up to your broker to trade automatically. There's a paper trading based system, screener. It's got lots to offer. It's a very, very powerful investing tool. And if that's something you're interested in, then please consider using my affiliate link in the description below. So what else is useful about Ichimoku? This is Trigano, who are a French supplier of caravans and utility vehicles and things like that. And this is the position I bought here. You can see the cloud is clearly bullish. Tons of space between the price action and the checkout. Some of you might have been terrified by the fact that this has gone up so much already. But I'm buying here. My absolute drop dead stop loss is going to be below the Kumo. Again, the idea that the price is just going to suddenly just go like that in one day is probably more likely. It could happen, but it's more likely to be that the stock market has done something, which means I won't sell, because I don't sell when the price falls below the Kumo if there's bearishness in the S&P 500 or the underlying market. So whilst my thing that would cause me to sell is a close below this price here, practically that's unlikely to happen. It's much more likely if the price was going to falter that it would do something a bit more progressive over time and probably end out dropping out of the Kumo somewhere of the cloud by here, because the cloud is probably going to come up to meet it a little bit. Might go horizontally for a while and then start to sort of meet it like that. So the actual break of the Kumo is more likely to be over here. I could be really unlucky and have it here, but I think it's unlikely. So let's watch what happens. As the price is moving forward, shows some signs of consolidation. At this point I can be moving my stop loss up, my absolute worst case stop loss up. Price is consolidating, bounces off the top of the Kumo. Again, I can move this up. The stop is much closer now. Oops. Price jumps. Nice space between the Chikou and the lagging line and the price action. Stop is going again. Cloud is thin. Been a bit of consolidation, which is why we're getting the flat bottoms on the bottom of the cloud. But again, we're moving upwards. We're trending. Okay, consolidation. Notice the bottom of the cloud goes flat. Again, we can be moving up. Consolidating. Is it going to Break the Kumo? No. Future Kumo turns negative, bearish. But actually, price action isn't closing below it. So this is a concern because it's indicating that this could be getting bearish as a result of this drop here. Let's see what happens. Price goes off again. Bit of a spike down, but then charges back up again. Keep moving our stop loss up. This reappeared on my screener at this point. Now, perhaps I wasn't quite so disciplined around buying when not consolidating, because I bought again here, which is not ideal because we can see that this is going to consolidate, or it is consolidating. My stop would be about here. Why didn't I sell? Let's just have a little look at the S&P 500. Okay, so there you go. The S&P 500 just completely had a big drawdown, which was some weakness here. So I didn't sell here because the wider market was playing around, and so I sat tight and waited. Let's just have a look again. S&P 500 is stabilizing and my stock is taking off again. So again, I'm moving my stop loss. Cloud is nice and thin, thickening up now because it's consolidating. Lagging line hits the price action, confirming that it is definitely consolidating. You could tell that already because of the flat base of the cloud. Jumps again. Cloud goes thin. Future Kumo goes thin. Price takes off again. By now I can start to move my stop loss again. And it's just a constant process of this. This is what I do. I'm tweaking my stop losses at night. Actually, whilst this position here is my drop dead value, if I need the price to close below that to convince me that it's broken the Kumo, what I actually do is I maintain a spreadsheet with Google Finance, a Google spreadsheet. I keep my notional stop loss 10% below, so that's going to be about 55, say something like that. And I'd have it about here in my spreadsheet. So if the price does drop down below 10%, I start to get a bit of a warning sign that things are going on and I need to keep a closer eye on it. And I can color code those stop losses. So if it goes 10%, 11%, 12%, I just go back and I adjust my spreadsheet, move it up a bit. 15%, I move it up a bit. So I'm constantly tweaking these stops up on a, once in the evening. It might take me half an hour, just breeze through them. You don't even have to do them that frequently, really, I don't think, but I have the time to do that. But then if the price does, say I had to stop there and the price did break down through that, like that, for example, it just notifies me. I'm not, I would only really sell if it broke here, but I'm just getting a bit of a warning. It's dropped off 10%. Do you still want to hold this? Go back, double check the figures. Are the EPS estimates still making sense? Is the broker consensus good? Is it actually that there's wider stock market weakness? Yes. Okay, this isn't about Trigano. This is about the stock market. Again, so I know that I can afford to have my stop loss down here. Let's go forward a bit more. Waiting. Even more weakness. It's gone below my actual drop dead stop loss now. The market is still weak, so I'm not selling. I'm waiting. I would have been checking to see whether Trigano's figures had changed again. No, they haven't. Stock market's improving. Stock is trying to rally and is rallying. Perhaps not as strongly as it ought to be. Strong rally back. Where's the strong rally in the stock? Okay. isn't there. Now we're below the Kumo and the still weakness. And so what I do here is I sell. Because there's been improvement in the stock market, but not really in Trigano. And it's been consolidating. So just to say that there's Ichimoku charts on Stockopedia, of course, as well. You know, we can look at the charts here. And you can access the Ichimoku charts through the overlay setting. Here it is here, Ichimoku clouds. Yeah. And all of the information is there. Again, you can see the Kumo, fast and slow moving average, and the lagging line. It's just easier to show you on the TradingView platform because one, I can introduce each element one at a time, and I can also rewind to a particular point in time to show you the trades. Another site that's really useful as well, it's called ichimokutrader.com. What's good about this website is you can build a watch list. Here's a watch list of stocks that I'm interested in. Let's go to Friedrich. And actually some of the signals that we talked about, for example, price crossing the medium-term average, the Kijunsen is a signal, and it highlights it on the chart. And if you click on it, it'll pop a window up and it'll explain the significance of it. So the price crossing the Kijunsen is bullish, and because it happened above the Kumo, the cloud, it's a strong bullish signal. So here it's indicating that actually the cloud turned from bearish to bullish, and it happened here, but the trigger for that happened all the way back here. The price is appreciating, which was what in the end twisted the Kumo into a bullish cloud. What else have we got here? Chikou is saying that the price broke, or the Chikou closed above the price action back here, but the actual price that caused that to happen is 26 days further forward, and it's here. The good thing about the Ichimoku is it'll give you straight away and tell you, oh, we're in a strong bullish trend at the moment. Whereas let's pick out another stock we've got here. Oh, this is the stock that I bought that I can't exit because it's embargoed as a result of the Russia-Crimea war. Yeah, and there's just red signals everywhere, you know. Future cloud is bearish. There's all sorts of price below the medium-term moving average, and it's below the cloud, so it becomes a strong bearish signal. Well, let's look at Kinross Gold, for example. There's two weak signals here. The first one is this signal here, where the fast-moving average crosses below the slow-moving average. That's the Kijunsen cross, that's what they're called. That's just the Japanese words for the averages. And then the second one is that the price broke down below the medium-term moving average, which is called the Kijunsen. But again, that's not world-ending. It could be that the price bounces off the cloud and takes back off again. And you still got the support of the medium to long-term base of the cloud here. This is a good resource, and actually, when I build my watch list, this is one of the things that I wick through on a periodic basis. I'm looking to see the trends and the signals being offered by my investments. So there you go, just a quick introduction to the Ichimoku overlay and the various components of the indicator. I hope it helps you see at a glance whether a stock is bullish or bearish, whether it's trending or consolidating. And what I like about it is it gives me clear signals, which helps me make a more objective decision. There are some challenges with using those signals in the indicator, such as, is this a weakness in the stock, or is this a weaker in the wider market? And I hope I've given you a quick indication of how I use the index, like the S&P 500, to help me decide, is this about the stock, or is this about the wider market? So we'll look into the whole way I do the selling in a later video. I wanted to give you an introduction to the Ichimoku overlay first and foremost, because I wanted to show you what part it played in my buying process. So now we've got the output of the stocks from the screener. I've vetted each stock report. I've shown you how I use Ichimoku in the process. In the next video, I'll show you how I combine all of those things to decide which candidates I'm going to buy. As always, thank you very much for watching the video right to the end. Please like, subscribe, comment. I'll try my best to answer any questions you might have. If there's any other services that I use that you're interested in, whether that's TradingView or whether that's Stockopedia, there are affiliate links in the description. If you do sign up for any of those services, you'll get a discount and I'll get a referral fee. I don't charge anything for the stuff I'm doing here, so it's one way that you can support the channel and keep me motivated in my work. Thanks for watching, and I'll see you in the next one. Take care. Bye.